President Biden's proposed income tax increases would hit the wealthy hard, specifically individuals who earn more than about $452,000 each year, and then couples, families making over $509,000 a year. That's according to a White House official who says the new rate proposed in Biden's American Families Plan would be applied from 2022. So how are the wealthy reacting? Well, here to discuss is Bloomberg's Wall Street reporter, Sonali Basak. Hey, Sonali, thanks so much for joining us. It is always great to see you. What are you hearing from your sources on Wall Street about what they're saying about the plan? Because if you think about it, these are folks who make a lot of money and stand to be paying more in taxes if this goes into effect.
Absolutely, because while taxes can be boring to some people, it's very fundamental to the way that people invest, right? So you have a whole bevy here. You have corporate tax rates, right? But you have capital gains, which is what many people are really worried about here. And so, say you have to start paying more on what you make out of trading profits, how you're engaging in stock markets, then, you've seen a lot of people that have rushed to sell early. Right now, you've seen dips in the stock market as you've seen in the last week or so. When I talk to very senior officials at the banks and wealth advisors, what they say is people are trying to lock in some profits now and then buy in again at that lower price. Here's the problem, Tim. We don't really know what the Biden tax plans are going to look like in their entirety. So if those taxes are retroactive, that means that you might have to start paying taxes on the things that you're selling right now as a wealthy individual.
And Sonali, as you mentioned, negotiations still have to happen. But I wonder, among your sources, were they not expecting this sort of hike at this rate? Were they surprised by what President Biden unveiled?
Well, there's some people who are really ahead of the curve on this. Mike Novogratz, who we talked to, the famous Bitcoin investor, he's somebody that's been actually talking about this for more than a year now. Charles Myers, who was a former senior official at Evercore, one of the top investment banks in the world, he's been saying to me, listen, it's not just the wealthy that's going to get taxed. It's actually a very broad swath of people that are going to be taxed here. The one thing that could be really interesting is carried interest, which is really a tax benefit that private equity executives have gotten for many years. The funds themselves are raising record amounts of money, guys. And so it's really not the fund investors right now that are going to get taxed. It's the executives who have really made a lot of money from the growth of these funds.
Look, that carried interest thing is absolutely huge, and President Trump even talked about it. But the fact is that many of these folks who you refer to, when it comes to carried interest and all, they're able to get their actual gains taxed by capital gains or classified as capital gains rather than as income, even though it is pretty much income. It's the carry. When it comes to these proposed changes, capital gains, carried interest, income taxes, is there one of them that your sources are most concerned about?
Well, carried interest, right?
Yeah.
The reason being is it will really impact a very significant subset of people, Tim. It's kind of the wealthiest of the wealthiest when you look at the hierarchy of Wall Street. The capital gains will impact everybody, right? It'll impact a broader swath of people. Joe Moglia, who was the former chair and CEO of TD Ameritrade, had told me it won't impact the everyday day trader, right, who is already paying short-term capital gains on those day trading. But when we talk about this kind of upper class of Wall Street, they've protected their carried interest for such a long time. There's an argument to be made that maybe it won't raise all that much tax revenue at the end. They will push back. And now you're getting to this point where a lot of people are saying, why aren't these folks having a more constructive tone with Washington as they look to get these changes that are more in the middle rather than very drastic? My sources feel that these changes are very drastic. But right now the tone seems to be somewhat adversarial.
And Sonali, I think it's important to remember that this would encompass less than 1% of taxpayers here in this country. But, these are great sources that you have, that you're speaking to. So we really appreciate you being here with us and reporting on this for us. So Bloomberg's Wall Street reporter, Sonali Basak, thank you so much for your time.
That was a great shot, by the way.
I know, it was our debut.
That was our debut of a new shot that we have set up here in the office.
Do we have it
really
again?
Cool.
Probably not.
Or it's somebody
Sonali's
walking
probably
away.
Not there. Yeah.
Yeah, really cool stuff. Thanks so much for watching. For more videos like this, you can stream Bloomberg Quick Take for free 24/7 in any of the places below. Get live news coverage, interviews, deep dive shows, and documentaries on the stories that you care about the most. And be sure to follow or subscribe to us on Twitter, YouTube, Instagram, and Facebook.